Hi YouTube, please give me a moment while I connect to Facebook. We'll be getting started shortly. Should be live on Facebook. Hi everybody, welcome to the Strategic Swing Trader weekly broadcast. I am Sami Abusad, Director of Education at T3 Live. Really good to have you with me this week. We got a lot to talk about, but first, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. If you'd like to download a copy of my free ebook, link for that is in the description below. If you find benefit in today's video, I would appreciate it if you hit the like button. And if you have any questions for us, please reach out by emailing us info@t3live.com. info@t3live.com. All right, here we go with another weekly video to discuss the market and some amazing swing ideas for next week. First, we'll talk about the market. Now, the NASDAQ or the Qs, is the tracking ETF for the NASDAQ 100, is been very bullish. If you look at the weekly chart, what happened last week was really bullish. Having said that, if you look at the SPY, that's not very bullish at all. If you look at the IWM, it's actually quite bearish. The IWM usually leads the other indexes or indices, meaning whatever the IWM does, eventually the Qs and the SPY follow suit. So in this case, the IWM is looking really bearish, and if I had to make a prediction, it would be that the Qs and the SPY follow the IWM. But that remains to be seen. We'll find out if what ends up happening with the banks, with the regional banks, and that will probably be the catalyst for the next move. Right now, they're not looking good at all. This is the ETF. And as you can see, we popped on Thursday, looked pretty good, only to crash on Friday. And I like to use the DPST, it's the leveraged ETF. It looks even worse. So it does look like FRC, unless it gets rescued, it will be the next shoe to fall. Having said that, you know, they just deposited 11 banks were forced basically to deposit 30 billion in uninsured money. So I don't think it's going to go under. It'll probably get bought or something. That's my thinking. But I think whatever happens to FRC and the banking sector will serve as the catalyst for the next move in the market. The reason it's hard to read the market right now is because the Qs is bullish. Very, very bullish, especially again if you look at the weekly chart. Okay, the SPY pretty bearish, the IWM all out bearish. So we have divergence, and we gotta wait for the indices to align, to be in alignment before we really have a bias. And so next week is going to be really important, in my opinion. It's going to be really important. If I had to make a prediction, as I said, it would be that the Qs, I have 3,000 shares of the TQQ, and it's up a lot. But my prediction would be that the Qs will follow the IWM and the SPY. I'm hoping that that won't happen. I'm hoping the Qs actually pops and everything else pops, but I don't think that's gonna happen. We'll see. Here's the bullish list. I got Apple. Geez, Apple, biggest company in the country, is about to break out. So it actually looks good over 157.50. I think this is 157.51. No, that's 157.50. So above it, long, as a long-term play, stop would be under here. Okay, which is 147 something, 147.50, let's just say. So it's exactly $10 on Apple as a long. AXON is just so bullish. What I like about the buy setup is that it tried to pop and then came in on Friday. So now if it tries again, it should work. So I like it over the base. It's not much of a base, but it basically over 217.50, let's just say, because it's spready, I'm sure, at $200 a share. stop under 207. So it's a big stop. It's $10 also. 10, a little bit more than 10. So that's the AXON. AQN, I did not like it once as a long, ever since that super bearish gap down. Tier 1, incredibly bearish gap down. But it tried to break down last week or the week before and failed. So we have a failed sell setup on the weekly chart, and therefore it looks higher if it can just clear $8. Stop would be under here. So the entry would be, I believe, over 8. Yep, over 8. Stop would be under 729, and target, I would say $10, which is where it fell from. Around 10 to 10.50 is where it fell from. Now, this is not one of the ones that I picked for my account and for the newsletter for tomorrow, for Monday, but it looks good. A CDTX, I mean, this thing is really bullish. The only thing I don't like about it is it's not a tight stop. It's a pretty big stop, but also the gap down over here. Otherwise, the entry would be over $1.80, $1.79, stop under 143. So it's about a 37-cent stop, okay, on the CDTX. DHC has put in a pullback. Don't forget, stocks correct through time, in which case you look to play the breakout, or through price by doing the pullbacks. So when a stock is moving up, it never moves up in a straight line. Moves up, comes in, moves up, maybe bases, and then you play the base breakout. Maybe it comes in, maybe, and sometimes it's just really sloppy, you don't play it, right? But most of the time I'm looking for pullbacks or breakouts most of the time. So this one would be a long over $1.62, stop under $1.39. Target one would be the prior high around $2 on the DHC. JNCE had a pretty bullish gap on Wednesday of last week, and now it looks like it wants to break out over whatever the highest number is, $1.64. Stop under $1.40 and target the 200 MA, the red line on the daily chart. That's the JNCE. SHOP is very sloppy right now, but it's doing a weekly buy setup basically. So I like it higher over $46. Ultimately, the stop should be under $39. It's a big stop, would be a longer term play, but I don't think it's quite ready, okay, on the SHOP. TMF, I'm already in, but I'm looking to add to it if it can take out the base, which is about 945. Stop can be as tight as 867 or 830 something. So up to you, but the TMF is the leveraged ETF for the TLT, the 20-year treasury. So what I like it mostly off the weekly chart, transitioning higher. That's the TMF or TLT. I like the TMF because it's not when you play something expensive, a pricey stock like TLT, it's only $100 per share in this case, but it ends up being a margin hog. You end up tying up a lot of equity in it. So I always like to use the lower priced because I can, I can make a lot more money usually for the amount of cash that I'm investing. Okay, and in this case it's leveraged, so you get bigger bang for your buck. The ZIM is okay. The daily is not so great, but I like the weekly. So long over $25, stop under 1932. That's a really big stop. Alternate stop would be probably the SPARS low, okay, which is 2075. Longer term play. That's the ZIM. And then the China stocks, there's a few of them that look good, like Bill or Billy. Is it Billy? I think it's Billy. Yeah, this is a weekly buy setup. As you can see, that's a nice weekly chart. VIPS is it was a daily buy setup right here, but I passed on it, and now I like it over the double top, so it would be over 15.51, stop under $14. And then that's the monthly, weekly, but whatever happens to the market is going to determine whether the China stocks go up or not. Okay, so those are the bullish ideas. Here's some bearish ones. I like the bearish list this week. Oftentimes I don't love what I see in terms of bearish setups. this ACRS gapped under, I mean, a whole year worth of basing. It's actually a year and 3 months or 2 months, whatever. So that means every single person that bought it last year and the first couple months of this year, every single person, regardless of how smart they are, how, you know, how good they are, how much money they have, every single person, when it gapped, is now underwater, is now sitting on a losing position, that bought it and held on to it. So if it starts to come in, I think it will see some nice selling. So I like it short. The setup is not perfect. That's the only problem. Otherwise, the idea, the theory behind the premise is really good. But the setup is not perfect because we don't like stocks to base at the top of a rally, meaning we don't like to see 100% retracement and then a base at the very top. We like to see a weaker rally, so the initial drop, which was this, and then a weaker rally, and then a rollover, not a straight base. So short under 676, it's under the weekly bars low, so it's 669, okay? Stop above it, which is 863, so it's about $1 stop. And then look out below if it triggers. So that's an idea. APEI is a 1, 2, 3, 4. So a 1, 2, 3 pattern is when you have a breakdown, wide range red bar that broke under a base most of the time, and then followed by a narrow range bar. 1, 2, 3, 4 is when you have a wide range breakdown bar followed by 2 narrow range bars. So it's called a bearish 1, 2, 3, 4 continuation pattern. So I like it short under $4. Stop over 465. All-time low, no predetermined target. So we'd have to just manage it. Most of the time, the way I manage is if I get 2 nice red bars. So here's the 1, 2, 3, let's just say. Okay, or the 1, 2, 3, 4. If I get 2 nice solid red bars in my favor, and let's draw the other one over here, then I start to go bar by bar. Okay? So as long as it doesn't take out the prior bars high, then I'm good. Like example, I is an open position. Now I got the solid, or the first bar. That's when I got it actually. That's my first bar in my favor. Okay, so I didn't get 2 solid red bars. So I'm not managing it bar by bar, but I'm gonna start soon because these are narrow range bars. Okay, but similar concept, a wide range bar. And then in this case, a lot of bars instead of just 1. I mean, instead of 2. But it looks beautiful. CVGW is a base breakdown. It's a tight, it's a sloppy base. It's not very tight. Not like the I or whatever, the other one. But it's a 1, 2, 3 on the weekly. So under the whole base, stop above it. It's an idea. Under 2270 by 2503. Weekly 1, 2, 3. Weekly. LSPN, LPSN, daily 1, 2, 3. Short under 380 by 453. Okay? PTRA, same thing, but I like the LPSN a little bit more. The PTRA, 107, stop over 134. Okay? REVB, a little bit risky because it's really low priced. This looks lower though. I mean, there's just no two ways about it. It looks lower. Under $1.40, so $1.39. Stop, the tightest would be 173. Okay, looks good. I don't know if it's available. We'll have to check on Monday. TradeStation doesn't allow me to check whether a stock is available to or hard to borrow, easy to borrow or hard to borrow on the weekends. So only during the week. So I'll have to wait until Monday before the open to check. And USO oil is officially no longer bullish at all. I mean, it was not bullish on the daily or the weekly, but now the monthly is also breaking down. You see it? That's USO. So it looks lower. I don't like the setup that much, but it gapped under a long-term base, and I always like that. So it looks lower to about here. So what's that? So that's about 40, I mean, let's say 48 or so, 48. So under last week's low, which was 57.94, stop over 61, and target is about 40 something dollars, 46 to 48, I would say. And that's my bearish list. So I hope you enjoyed this week's video. Again, if you have, please be sure to hit the like button. And if you have any questions, email us info@t3live.com. If you'd like to find out more about the strategic swing trader or about any of my services, links in the description. Thank you so much. Enjoy your weekend, and I wish you all the best with your trading next week. Thanks, everybody. Take care.